It is absolutely brutal out there. The only two coins that I can see are up, well, three coins that I can see are up are USDT, DAI, and USDC. But I can't think that anybody in this community wasn't expecting the pullback, because we did say that we think the NASDAQ is going to pull back. And when the NASDAQ pulls back, we think that Bitcoin's going to pull back. And, well, that's where we are today. Look at Bitcoin. Bitcoin is down below this trend line. And I guess the next level of support, which is a critical level of support, 20,582, so 20,600. And as I said to you before, this is all happening because of the NASDAQ, or because of the bigger macro picture. The NASDAQ now down 235 points. Nothing unexpected. We did call this. Today, what we're going to be looking at is why the NASDAQ has come down, why everything is coming down. We're going to look at how far this dip is going to go. And then remember that today is Friday. On Fridays, we banter. And we've got a massive banter here for you today. We've got Vinny Lingham. We've got Anatoly Kovenko, who is one of the founders of Solana. And we've got Jose from Delphi. First time we've had him here since the lunar collapse. So it's going to be one of our big, massive Friday banters. If you're just woken up, get the fuck out of bed, bitch. A bunch of DJs. I can see you guys in the comments asking where I am on my position today. I told you exactly what happened. If you were here with Sheldon Shaw, I told you what happened. I was super short. I was short Shiba, Matic, Rune, I was short everything. Yesterday Sheldon walks into my office, big blue eyes, typing on his screen. I'm like, Sheldon, what did you do? He's like, I just longed Rune. I'm like, shit, I better cut my shorts and go long. And I got killed by the peer pressure, and here I am back at a 10% return, position 328. So that's bad. I am long again though. I'll show you in a bit. I'll show you which tokens I'm long again, and we can talk about that. All right, the lesson there is don't listen to Sheldon. Can I say that? All right, but we are having fun. Kyle, where are you on the competition? Let's see where Dupes is.
I think we're in the second.
Oh my goodness, Dupes is back.
We are making a resurrection now.
Okay. Oh my goodness, Dupes is just behind me. Carl's just behind me. Have you got any positions open? None now. Oh my goodness. This is going to get exciting. That's going to get exciting. Alrighty, let's get to the fun. Welcome back, guys. Welcome back. If you are new to the channel, welcome. To the most loyal community in the world. 96% of you are subscribed. The other 4% of you are absolute losers. Subscribe. That's what you need to do. Just subscribe. And also smash the like button. Let the YouTube algorithm know that we're here. Also, I changed my sweater. I've got a new sweater on today. Let me know what you think of the new sweater. The way you like it, Carl, just behind you. All right, I think we're still waiting for Anatoly. Anatoly said he was going to join us. He's the founder of Solana. He should be here at some point. But before that, I've got Vinny, and I'm going to be catching up with Vinny around what we're seeing in the markets today, because Vinny is probably good to be talking to about that. Got Jose here. He's an absolute builder, an absolute gem. We'll talk to him about narratives, what you should be investing in if you're buying this dip. And then I guess what we should be talking about is whether we should be buying this dip or whether there's a long way down to go based on why the market's actually down. Cool, you got it? Good enough for you? All right, let's do it. Love the sweater, fits good, much better choice today. Amazing, thank you guys, much love. Remember, it's Friday. Our Friday banters are brought to you by NordVPN. If you are trading crypto, you need to be trading with a VPN. The reason why you need a VPN is because a VPN masks your IP address. When you mask your IP address, you tell hackers or you hide where you are from. Makes it much harder for hackers to know where you are. makes it impossible for exchanges to know where you're trading from. So you can be trading from anywhere in the world. Makes it also very difficult for the legal authorities to be able to prove anything about where you were when you took trade. So you make your own decision. If you do want to get a VPN, there's a referral link below. Get NordVPN. They are the best VPN for crypto people. You click that get the deal button. You pay $2.98 a month, and you protect your crypto. Just do it. Again, if you're going to be in crypto, use a VPN. If you're going to use a VPN of a company that really supports and loves crypto, and that's NordVPN. So do that. All right. So that's our sponsors. Much love to them. Let's get Vinny here. Vinny, are you surprised by this dip? Were you even like a little bit surprised by this dip?
I was very surprised by this dip. I mean, a lot of this has got to do with the Fed comments, Fed FOMC members' comments yesterday. Mary Daly, I think, and a few others. Look, the bottom line is that the market is trying to forecast cuts into 2023 or late 2023, and the Fed is basically ruling it out right now. They're saying that, and I wouldn't say the Fed, but there are some voting members of the Fed who are saying that they're not going to be even thinking about cutting in 2023. You got mortgage lenders going bankrupt right now. There's a news headline on Bloomberg today. This is a weird thing because like Powell was kind of backing off and getting a little dovish in his last comments, and the market rallied on that. And now you're hearing conflicting arguments. This is all macro based. This is like nothing's happening in crypto right now that's causing this. This is the broader world issues.
Look, so we had the NASDAQ, which was up. If you look at the NASDAQ in the last month, and I keep saying this to the community, you had the NASDAQ in the last month. Let's just quickly go to about here. So that's about a month ago. You had the NASDAQ up at 1.20% or 17% in a month. That's a lot for the NASDAQ to go up in a month. And now we're coming down and we're testing the trend line. Regardless of the charting, when the NASDAQ goes up 20% in a month, surely you can't be surprised that it's now taking a 3 or 4% pullback. And this pullback that we've had today is the biggest pullback that we've had in weeks. I don't think we've had a 243-point pullback on the NASDAQ in weeks. So, I can't see why anybody's surprised.
Well, but remember, crypto is a leveraged play on US tech, if you think about it, right? Like, if US tech, if the NASDAQ's up 5%, crypto's up 20%. If the NASDAQ crashes 5%, crypto's down 20%. This is the world we're in because like the capital flows and whatnot. Like everyone sees crypto just basically as leverage on tech.
So the two charts that are worrying me, to be honest, I'm watching two other charts which are worrying me. The first chart that's worrying me is this 10-year Treasury yield. Now it looks like it's taken a reverse. 10-year Treasury yield going up, almost touching 3%, which does mean that all of a sudden people are expecting higher interest rates and more aggression from the Fed. The second chart that is really, really, really worrying me is this dollar index. So you've got this dollar index now aggressive again, 108 again. Remember that the high there was about a 109.320. We thought the dollar was starting to come down. Looks like people are climbing back into the dollar. That's making everything collapse, right?
Yes, correct. The rest of the world struggles because look, most of the world's sitting with US denominated debt, and so they have to pay back in dollars. So let me give a simple explanation to people listening. If you're in South Africa, which Ran and I are from, and you owe the US government, let's say $1 billion, and the Rand dollar exchange rate is 17 to 1, if the dollar gets stronger, now you have to print, 18, let's say, rands for every dollar, or 19 or 20 to buy a dollar because the dollar exchange rate is the Rand dollar is weakening. So that's creating inflation in your country because now you're having to print more dollars. So basically, the US's number one export right now is inflation to the rest of the world because by the dollar getting stronger, we're forcing other countries to have to print more money for it.
That's true, and that's true. If you start thinking about it like that, it's crazy. We did get inflation readings from the UK this month, 10.1%. Crazy, scary stuff. The Eurozone around 9%. It's starting to look scary out there from an inflation point of view, right?
Well, yeah. So now what do you do, right? If you're in other parts of the world where the dollar is getting stronger, you have US denominated debt, you're having to raise money by selling bonds or printing capital or whatever. Now you get inflation. Now you have to raise rates in your currency. So this is the other problem, right? If you start raising rates in your own currency to quash inflation, you're gonna kill exports. if your currency gets too strong, you're not competitive with other countries in the world, and so now you can't export as much as easily to the US or anywhere else. The US basically is on a trajectory right now where we can crash the world economy, and that's the concern. If you look at if you go back to your previous slide, Ron,
Yeah, let me go there.
yeah. So if you look at the July peak that you pointed out, that peak was, I think, the day before the world central bankers met. Okay. And the next day, everything tanked, and they call it the internal thing was like some court. I forgot where it was. But there was, based upon like them all meeting, there was some agreement to weaken the dollar at least, and we see it, in the coming sort of days and weeks where the Fed's comments were a bit more dovish from Jerome Powell, and the dollar got weaker. Now all of a sudden it's strengthening, because what's happening is that the market is saying, we get that you think, we've kind of bought into the idea that this is a bit too strong, but you're not giving us any reason to keep believing that it's not just a narrative, that you're going to keep raising rates, and so we're going to go back up and retest the highs, and very likely we see 110, 111 on that index.
I'll tell you what's worrying me even more. So inflation has started to come down, and the primary driver of inflation coming down is that oil prices have come down a lot.
Yeah.
And so that's causing a lot of the consumer goods that are made with oil or oil derivatives that are transported to stores, et cetera, to come down. But if you look at why oil is coming down, it's because the US it's replenishing its strategic reserves. It's not because the manufacturers are manufacturing more. It's because the US is replenishing very strategic reserves to bring the oil price down artificially. And that is a very scary scenario for me, because they can't continue doing it forever. And the fundamentals of oil and the war in Russia, Ukraine, and the relationship with Saudi Arabia isn't getting any better.
Yeah. So here's the rub here. Like, the Fed keeps referencing the job numbers and how strong they are in the US, but that's one of the issues we have is that there's no immigration really happening in the US. Immigration is down like 80 or 90% since COVID. So what you have a situation where the labor market looks really, really strong, because we don't have any like import labor coming into the market. The US has been built as a country on immigrants, right? So now you have this situation where the Fed is so well trained to look at job numbers, but if there's no new labor coming in the market, the labor numbers are going to get tighter and tighter. We're not going to see a situation where there's like 5% unemployment, because we don't have any new people coming in. And so they're going to potentially maintain their current sort of hawkish stance, and that's scaring the markets and the traders. So look, the way this ends is something breaks. I have a firm opinion right now that something has to break in the global, or at least the US or the global economy, for the Fed to actually pivot and then change trajectory and path. Okay.
So while something breaks, do we test the lows for crypto? Do we go back under that? I don't know what you call the low, 17,000, 17,500. I don't know where you call the candle. Do we go below that, or are we not going below that?
I don't think we go below that. I think that Ethereum's got the merge coming up. There's a lot of hype on the merge, and that may see us get Ethereum at least up. The thing about the Ethereum merge, which is interesting, is there's a lot of money on the sidelines that can't buy Ethereum proof of work because of the whole ESG narrative around it. And these guys and these funds want to buy Ethereum. So after the merge, they're going to want to buy it. So there is a run up. It may be a buy the rumor, sell the news effect, where
event
where it tanks afterwards. So we I don't know. Like, no one actually knows what's going to happen. But my gut feel is that we probably go choppy sideways for a while, maybe a pump here and there. I don't think there's a breakout until the Fed does a hard pivot. And I think that the longer they take to do a hard pivot, the more risk there is to the global and the US economy. And eventually something breaks. Now we're going into midterm elections in the US, November 8th, which basically means that, we're going to see what happens when people go if you look at like Biden's approval numbers and you look at the polling, it looks like the Democrats are going to lose lose this election, you're going to see the Republicans take control.
Amazing. Listen,
this
on that
is-
note, on this note, I want to quickly pivot because we started talking about the ETH merge, and I see Anatoly just joined us. Anatoly, welcome, my friend. How are you?
Great. Thank you for having me.
Amazing, Jose. We haven't seen you for a while, but welcome, my man.
How's it going, guys? Good to be here.
So listen, we started talking about the ETH merge. I think Vinny started to talk about it. I think this is a very, very, very good time to start talking about one of the biggest events in crypto, I would say. You know, you're taking a big airplane with in mid-flight, and you're finally moving from proof of work to proof of stake. How do you think the merge is going to go? Let's start with that. Is it going to be a smooth event after all these test nets, or is there a lot of risk that comes with a technological challenge like this?
Morning, Tony. We should ask Tony.
There's always a little bit of risk, but I think given that they've gone through 8 testnets or something already, and they were able to finalize all 8 times, I'm pretty confident that it'll be, smooth. But you never know, right? There's the surface area is so large for these systems that it's very possible that something could happen, but I wouldn't bet on it.
When you say we've been through 8 test nets already, I mean, I get that Ethereum has moved to 8 test nets, but what about all the DeFi applications and USDC and USDT and all the other applications? Have they also been robustly tested?
Well, I think if you're not thinking about the other fork, all the applications that are sticking with the POS fork, they don't really have to test anything, right? It's going to be byte for byte compatible. Everything's going to work just fine, just straight out of the box. It's if you're considering is the proof of work fork viable, and what happens when the value of USDT and USDT there goes to 0, and how do all the positions and these DeFi applications respond to that? I mean, that's probably going to be a shit show, but I don't know how many people seriously considering the proof of work fork as viable.
Okay, well, we'll talk about the proof of work fork because I think it is something that needs to be discussed. Jose, what do you think? The Ethereum merge? Are you expecting a nothing burger? Are you expecting any fireworks?
Yeah, I kind of agree with Anatoly. Some of the smartest people in crypto have thought a lot about this. There's been a bunch of testing. I think this stuff always has a lot of risk, but I do think the proof of work fork is kind of a non-starter. I don't really see anything happening there. I don't think USDC or USDT are going to be honoring stablecoins on there. It'll be interesting to see what happens with NFTs on there, like punks and stuff, how valuable they are. It'll be an interesting sort of social experiment, figure out how much, provenance matters and all this kind of stuff. But yeah, I don't really buy the proof of work fork narrative. Don't know about you guys.
I have a question. Maybe Tony, you have a view on this. What happens to people who aren't monitoring what's going on in proof of work, proof of stake on the merge? And some guy's got some crypto sitting on there, and then he does a transaction with someone else, and he thinks he's getting USDC, or he thinks he's getting a token, but it's not. It's on the old chain. How much scam risk is there for people who have no idea technically what's going on?
I think post-merge, existing nodes should basically accept the proof of work the POS fork as the canonical chain. So if you updated recently, you should be fine. I don't remember what that threshold is. But that's I think the gnarly question here. If you just really have no clue and somebody convinces you that the proof of work merge is the right one, there's potential that you sign a transaction that can be replayed on both, and there's a bunch of attack vectors there. There's also, there could be on paper financial contracts that say, I need you to deliver me ETH, at this date. It doesn't specify what fork, and it's going to be cheaper for somebody to deliver it to you on the proof of work fork that nobody's using than the POS one.
Well, it's going to be a lot cheaper because you got right now the fork it's forecasted 3% of the value of the ETH network. If you look at the Poloniex futures on this fork, you're talking about 3% of the value being accrued to the new proof of work, or the old proof of work network. Do you think it's going to happen on the day when the fork happens? Are we going to fork into 2 chains?
I think there's enough miners that have said that they're going to try it, right? There's the ETH POW project. I mean, like, sure, it's part of the process. Like, in my mind, this is just like very healthy. If you don't like proof of stake, you have the power to veto it by running your own fork, right? And if you don't like proof of work, you have the power to veto it by ignoring that thing. This is the whole part of decentralization. Nobody's being forced to adopt proof of stake. It's just, here's a bunch of technology. It's being adopted because it makes sense for most people.
Okay, so let's talk about a little bit about proof of stake, and we now all accept that the proof of stake chain is going to be the chain. But I think we got a little bit of a curveball this last week or 2 weeks ago when OFAC sanctioned Tornado Cash. So I think, first of all, that was a really, really, really unprecedented move, sanctioning a DeFi decentralized protocol. And also, by virtue of sanctioning the DeFi decentralized protocol, people's GitHubs were closed down. Founders and contributors to the project have been arrested. It's become, the website's been shut down, etc., etc. And that's really got a lot of questions around the decentralization aspect of proof of stake. And I think the question that was starting to be asked is, if you look at where the ETH are lying, they're lying in Coinbase, Kraken, centralized entities in the US who are governed by OFAC and probably very, very scared of OFAC. And questions have been posed through...
Is there an entity on there that isn't afraid of OFAC enforcement?
Well, this is exactly the question. So I think it was Eric Wall who did a poll, or Lefteris. It was Lefteris who did a poll. And he said, question for Lido Finance, Coinbase, Kraken, if regulators ask you to censor the Ethereum protocol to censor at the Ethereum protocol level with your validators, will you comply and censor at protocol level, or shut down staking services and preserve the integrity of the network? That was then followed by a thread or a tweet from Eric Wall, who said, question for the Ethereum community, if a majority stake chooses A in this poll, will you X consider the censorship an attack on Ethereum and burn their stake via social consensus, or Y tolerate the censorship? Vitalik then commented that he voted X. So let's go into a world of proof of stake. And now we're seeing that sanctions are one of the weapons that the government is willing to use to censor open source software. What happens in the proof of stake case? Does this not make the Bitcoin maximalist argument a little bit more valid?
The same thing can happen with Bitcoin, right? If you control a bunch of hash power and you're signing blocks that have a bunch of bad addresses, and the U.S. government deems that that's facilitation of like helping OFAC like transfers, they can force you to shut down, or they can force you to not sign those blocks, and they can take over your whole business and force you to continue signing. They can force you to censor, right? And the only way that Bitcoin can route around that is if somebody has more energy somewhere else that can generate a fork that's heavier. But that's actually harder to do, right? It's much harder if the U.S. government figures out how to seize 67% or 51% of Bitcoin's hash power. It's kind of game over, right? In terms of censorship, go figure out how to build a bigger proof of work.
I think I agree with you there, but I think it's much harder when it comes to proof of work than it comes to with proof of stake, where you definitively know where the stake is sitting. I mean, you can clearly see it's Kraken and it's Coinbase, and it's a whole lot of.
I mean, you do. The only difference is that right now energy is really expensive in the U.S. comparatively to a lot of other places in the world, and hash power isn't concentrated in the US. But it's very much possible in 20, 30 years that US becomes the cheapest place for energy for whatever reason, and then most of the hash power is here. Then what happens? Right? Right? Like, just consider that most of the, like, imagine a world where most of the energy is in the US, like most of the free energy, because we overbuilt too many wind farms or whatever, and now this is the easiest place to farm Bitcoin. Why wouldn't it concentrate here? In the proof of stake case, it's much easier to fork away the majority stake. and it doesn't break any applications. This is kind of the power of it, because it's virtual. You don't really care about the quorum or the folks that are deciding what the forks are. What you care about is, are all the applications running on top still running, and are they compatible? Like, is there no breakage? And changing the quorum is the easiest thing to change. So censoring the majority is like the easiest fork to make.
Jose, anything to add there?
Not on the proof of work versus proof of stake thing. I kind of agree with Anatoly. I think it's a problem for all consensus algorithms, really. I think it's quite hard to stop, other than adopting something like threshold encryption, like what Osmosis is doing, where validators literally like wouldn't know what transactions they were signing, and so couldn't censor. And that's kind of my take on this. I mean, I think the OFAC ruling was, from everything we've heard, like pretty out of the blue and like not fully thought through. So I think it's going to get challenged to hell, and I hope that it doesn't stick, because I think it's like terrible for not just crypto but for the world. But I think what regulation always does is kind of pushes us to build like more robust, more decentralized systems, right? Whether it's securities regulations or OFAC or whatever it might be. I think it's just going to push us towards stuff like threshold encryption and other solutions that make this kind of impossible. Decentralized front ends, all this kind of stuff that's needed anyway. It's just like, I mean, the regulation like objectively doesn't make sense, right? There's all sorts of problems with it, like dusting and stuff like that just make it like kind of, it's clear that it wasn't fully thought out. So I'm hoping that it gets challenged and doesn't stick. I don't know what you other guys think.
I mean, I would say that like this is a good example of why decentralized identity is so important. And I think that, you know, trying to create this censorship at the protocol layers, you know, this is the problem we have. If we had like the wallet screening, I mean, obviously, you know, I started Civic and we've been working on this for many years, and so doing decentralized identity at a wallet level is probably better than at a protocol level, because then, you know, from the application level, they can decide which wallets they want to interact with. But you know, it's been a tough journey, because a lot of applications, a lot of money, like there are people who just don't want anyone to know. That's why Tornado Cash is out there. They don't want to know who it is. So the problem really is like how much privacy is needed for personal transactions versus how much privacy and anonymity is needed for illicit transactions. And so if you say, look, we want to comply with OFAC, we want to comply with GDPR or whatever else. So wallets that interact with our application need to have this level of identity embedded in it. You can be anonymous. We don't need to know who you are. We just need to know that you are at least validated by a third-party service, etc. And so all this is built in live. I mean, the adoption cycle has been the problem up to now. And I think that in some ways, what happened with Tornado Cash is basically pushing people to say, look, if we don't self-regulate as an industry, we are going to be regulated, whether it's at the protocol level, as Anatoly said. It doesn't matter whether it's, you know, proof of work or proof of stake. Eventually, you're going to have this regulation coming in harder and harder. Or as an industry, if we self-regulate and say, look, this application wants to be compliant at least with these regulations. It doesn't want to invade the privacy of the users, but we'll make sure that the wallets we're touching are, you know, either US persons or whatever criteria you want to have at the wallet level. That's always been my approach. I mean, I don't know whether it's right or wrong, but that's where I look at it.
I mean, I guess it's true to say that they definitely overstepped the mark, that this regulation is definitely unfair. You know, and I think, you know, sanctioning a protocol where, according to Chainalysis, 80% of the transactions are completely legitimate and just normal privacy transactions that everyone has the right is crazy, is to sanction the whole protocol. But the question is, who would challenge this? So who would be, you know, in a decentralized protocol, who would have enough incentive to take on the US government and enough funding to take on the US government to overturn sanctions? And the reason why I ask this is because I'm thinking about the Russian oligarchs who have all the resource in the world and also were unfairly sanctioned in a lot of cases. I'm sure a lot of them were fairly sanctioned, but a lot of them were unfairly sanctioned, and even they haven't been able to yet overturn the sanctions. I'm just wondering, like, Tornado Cash, a protocol which has had $7 billion flow through it since its inception, 12,000 users, who's got enough incentive to take on the US government here?
I mean, the industry you don't need like a ton of resources to challenge this. You need some significant ones that's much more than like a normal individual would have. But as an industry, there are enough lawyers and smart people and like enough funding to make a viable case. And it's just going to be a really long, hard road that's slow, take years. It'll have to go through the courts, right? And it'll be kind of like the PGP fight for the right to encryption in the 90s. That sucks, right? But that's basically the right way to do it in the United States.
And it's going to take a long time.
I agree with that, but we still go back to the point that like the U.S. government basically has all these rules and challenge it. Like it's not really it's not a short-term fix to challenge them, right? So what do? Do you self-regulate? Do you just say, look, we're going to double down on anonymity and Tornado Cash type services? Like at this point in time, when developers getting arrested and putting in jail, it's kind of scary, right? Even the best developers, are going to be like, okay, I need to be totally anonymous. I need to use my NordVPN. I got to be offshore in some country writing code and hope that the U.S. government gets you anywhere. So what do you do? Like as normal people in the crypto world, what do you do?
I mean, they arrested a developer of Tornado Cash.
Yeah.
A contributor of Tornado Cash. I don't know if it was one of the core developers, or certainly one of the contributors. I mean, one level up from that is arresting the founder of the protocol. I mean, they could just say, look, we're going to arrest Vitalik or we're going to arrest Anatoly because, he built the protocol upon which this thing was built. It's just one more level. That's the ludicrousy here. It's just one more level. I've never heard of a gun designer or a gun manufacturer or an inventor of a gun being arrested for a shooting at a school using a gun. This is the part that threw me off.
I mean, OFAC sanctions are pretty scary, right? Because you can basically get done for whatever the money is being used for, like effectively, as I understand it, which can be pretty bad. I don't think we have all the details on that case, like whether there's something else they're gonna try and bring, like that he actually facilitated money laundering or whatever. I think at the base, if he's just like an open source developer, it's a complete kind of travesty, like him being arrested. I think the industry and the world's going to get behind him in a big way and kind of not let this stand, because as you said, it makes no sense. But I don't think we have like all the facts yet necessarily. I'm curious, like what do you think, Anatoly, like the future is for this stuff? Like, do you think threshold encryption, that's sort of the like mempool threshold encryption, so validators have no ability to kind of censor transactions or even see what their processing makes sense, or will that just get kind of OFAC'd as well?
I personally believe that the only way this stuff flies is if we get through the courts and get the U.S. government to agree that the base layer is no different than a switch by like AT&T, and they're not going after the folks to put up the switches for processing the Tornado Cash transactions, right? Like we really need like a clear line separation there, that there's a huge difference between just running the base layer infrastructure versus something like that is advertising for illicit activity. How that's going to happen, I don't know, and like when, right? But like I personally think that if the U.S. government really, really doesn't want the base layers to process like anything that touches anything like hacked, stolen funds that are going to North Korea, if they go after the base layers, they'll go after them anywhere. It doesn't matter if it's threshold encrypted. It doesn't matter what you do. So that's kind of my doomsday mindset there, that we really need to win it in the courts.
That's going to take a long time, and my concern is, having seen these court cases before, there's not enough people with enough incentive and enough money to fight this type of battle. I think what they did here was they cut off the Tornado Cash before it grew big enough to have enough people incentivized to, if Walmart and Target were using Tornado Cash because they wanted anonymity, because they didn't want people to see where their transactions were, and Walmart and Target were taking the US government to court, things would be different. But right now, the users of Tornado Cash are not Walmart and Target, and I don't believe that anybody's going to have enough incentive to go and fight a real fight that you could actually win.
I think there's organizations in the space, though, like CoinStats and others that are going to be challenging this, that are well funded, that have really smart people there. I think there's also discussions around like forming DAOs, like that sort of different DAOs can donate to and form like a defense union. And I think there is enough money in the space, kind of like what Anatoly said, to be interested in fighting this. The tough thing with privacy is like historically, you know, there was a privacy battle for the internet as well, right? And the argument is always, if you have nothing to hide, like why do you care, right? Or in this case, like especially Tornado Cash, the press is really bad, right? It's North Korea, it's hacked funds, it's stuff like that, and ultimately, like all of crypto, but privacy as well, is like it's defensive tech, right? It's tech to defend you, also from governments. I think like ultimately, it's like kind of government PvP tech, right, and corporation kind of PvP tech. So it's always difficult. It's sort of an abstract. It's an abstract thing to try and describe to people, right? Why you need the right to privacy, why this was encoded into constitutions all around the world, until you kind of feel it, you know, until states start to overstep, and then citizens kind of realize why this is needed. And historically, that's kind of always been the case. I'm hoping it doesn't take us reaching there. But I also think kind of the world's decentralizing enough that there will be some countries that take rational attitudes toward this and can differentiate themselves kind of that way. And we don't all have to sort of continually bow down to sort of dumb regulation by the US.
I don't think I don't think it's possible. I don't think countries can outregulate the US. I mean, if the US wants to arrest someone for something in a country, no matter what, like, you know, whichever country it is, if a developer is doing something where the US says, hey, you're helping, you're helping Korea launder money through bots, they'll come after you no matter where you are. Like, you know, that country's laws can't protect you.
Yeah, well, the Dutch police arrested someone 2 days after the US OFAC put the sanctions on. I mean,
because America controls the banking network of the world, right? So if you don't, as a country, if they say, look, this guy has been sanctioned because of this and that reason, if you don't comply and have him arrested and whatever, extradited or whatever, you're going to be cut off from the banking system. What do? Right? What do they do? They have to do it. They have to comply with the US regulations. And this is the problem I've seen with crypto. I mean, having been in it for a long time, the longer we go on in crypto, the more and more crypto looks like the banking network. It really does. Like if you look at Coinbase, Binance, FTX, all these exchanges, which are effectively like layer 2s for the underlying blockchains, the more and more like the compliance that they have to do, it looks like banking, right?
Only in the United States.
It's not what Satoshi intended initially, in my opinion.
Agree. Anyway, listen, enough about Tornado Cash. I think everyone's saying, okay, we've heard enough about Tornado Cash. I do want to pivot the discussion to something that I saw, and I think you guys are all very, very, very close to DeFi. And so this is something that I want to talk about. As I said to you guys in the waiting room before, I was in Asia for the first time in 3 years last week. I went to Korea Blockchain Week. Very nice to be back in Asia, because Asia is the hub for me of blockchain development. They seem to be kind of like very forward thinking. They always have been. Certainly in 2017 and 2018, the best, or a lot of the good protocols were being built there. A lot of good projects were coming out of there or were funded out of there. Back there this time, and the narratives are completely obsessed with Metaverse. I guess I heard 75% Metaverse NFTs and gaming, and 25% decentralized options, decentralized derivatives, and there was pretty much no talk of anything else. When I got back, I then looked at this chart from the block, and it said Solana funding massively flipped from DeFi apps to gaming and NFTs over the past year. So maybe this data kind of confirms what I saw in Asia. Wondering from you guys on the ground, specifically you, Anatoly and Jose, what are you guys seeing? Is that the narrative? Is that what's playing out? Have we become over obsessed with Metaverse gaming? Is that what's happening out there?
I'm more like worried about now that's growing. Like, why isn't DeFi growing as fast? And that's really my concern. So much, not really. Like, I think that's growing at a healthy pace. I think it's obvious that like once NFTs show that there's product market fit and there's real revenues to be made, I think it was pretty obvious for everyone in gaming and entertainment and like content creation that that's a place to build your next business. Like, where else is the next Marvel, the next Disney going to be built? It's not going to be like competing with them. You have to go like start in somewhere new that's really growing much faster than they are. I think I'm more concerned, like, why is there like lack of funding for DeFi, not just in Solana, but kind of there's been like a bit of a DeFi winter like across the entire industry. And I think part of that is like it grew to a point where it's now touching the regulated sector, and it becomes really, really hard to grow beyond that because it's a really, really slow process.
So you think
Yeah.
that it's regulation, stifled by regulation? You don't think that it was because of the way DeFi was structured? And I mean, the way DeFi was structured, specifically DeFi 1.0, which was, I called it last year's DeFi, which was structured around token inflation reward yields, which pretty much was a bubble that burst. And now there's this whole hashtag and narrative of real yields. And when it comes down to real yields, we're celebrating yields of 2% and 3% and 4% and 5% versus the 200% APY.
Those sound more realistic to me.
Yeah, I agree with Antonio. It's like this is it. It is more realistic.
Right. So like I agree with you. I think like once you figure out that like transaction farming, right, effectively what a lot of those things did, can only get you, it can help you with a cold start, right? You can go from 0 to 1, and if you execute it well, you can build up your first initial audience, but then you have to have real product market fit to carry your protocol, and that's lacking, right? And I think growing those protocols, like for Aave and Compound to grow to a point that it's commercially available to like users, like in a large scale way, is really, really hard because of the stuff that you see in like the US government going after Coinbase, right, for offering yields, and like BlockFi or whatever. Like Aave is in the same spot, right? To really take you to that next level, somebody has to push it, and whoever's pushing it is going to be on the hook.
Okay, so it's stifled by regulation, basically.
I think for now, yeah. What I really hope is that sometime soon we get, like, I don't know, the Loomis spill would seem pretty decent. Like there's some movement on US regulation, like we saw with the, as bad as the DMCA was in the 90s, the Digital Millennium Copyright Act, it at least drew a line between Google and Napster, and a bunch of companies were able to be built, right? And we actually saw the web become like a real viable business platform. We don't have that yet for crypto, for DeFi, and that's again like slowing everything down.
Yeah,
wow.
I mean, personally, I'm still very bullish DeFi though. I think DeFi is kind of like the core of all of this stuff that we're doing, and I think it's worth like contextualizing and just kind of looking back and realizing that a few years ago, like when I first got into the space, there was no DEXs, and also everyone said DEXs were like impossible, right? Like there's never going to work on chain. There was like this janky, order book DEX, like Ether Delta or whatever it was, and there was no on-chain lending. Like there was all peer-to-peer markets that didn't work, and now we have like Uniswap and Serum and places where you can trade on chain with like a similar, at least for spot, like similar experience to what you get on a centralized exchange, right? And that's like huge. It's like kind of hard to overstate how big that is. And I think DeFi is now kind of taking the next step where it's going to go after derivatives. It's going to go, and I think that's why people are excited about that, right? Spot in a sense has been, I wouldn't say solved, because there's always innovations that come out of left field, but clearly it's like pretty efficient compared to on-chain derivatives, which are still like, I don't think anyone's fully solved. And then I also think DeFi needs to become a more comparable experience to centralized exchanges. And I think it will with networks like Solana and Aptos and Sui, but they can provide the speed for you to do Oracle updates fast enough and offer enough leverage and do liquidations fast enough that you can really recreate that centralized exchange experience. And then I think the other part of that is kind of having these bundled experiences, right? Because right now you're going one place to trade spot, you're going somewhere else like Aave to lend and borrow, and then you're going somewhere else to trade perps. And I think ultimately people want like a verticalized kind of rebundled DeFi experience, kind of similar to, I guess, like Mango on Solana. And I think that's going to happen. I think on-chain derivatives is going to get more efficient. On-chain lending and borrowing is going to get more efficient. But for me, like especially with what happened with 3 Arrows, with what happened with Celsius, I think the pitch for DeFi has kind of never been stronger. And I think tokenization, like I think tokens are in a sense like the killer app of this whole thing so far. like aping tokens and not just crypto monies and crypto protocols, but even centralized businesses, right? We're seeing issue tokens like Revolut and stuff like that. I think that's not going to stop, and DeFi is going to be the rails where all this stuff trades, including NFTs, which I think, you know, are the part of the allure is the financialization, and including all the metaverse stuff. I think will all run through DeFi. So yeah, I'm still very bullish DeFi long term.
Okay, so I mean, if you were allocating capital, and you could allocate between two sectors, and you could allocate between metaverse gaming and NFTs and DeFi, what would be your capital allocation? What would be a split? 50-50? Would it be swayed
I'm more founder based. It's like, for me, like a strong founder, doesn't matter what they're building almost. So, but like you can tell that recently, right, at least in the Solana ecosystem, there's been a lot, like an influx of founders that are stronger on the NFT gaming side than on DeFi side. And that doesn't mean that there are no DeFi founders, that one is just blowing up. But like, why isn't DeFi blowing up as well? And my belief is that you have mature protocols like Compound that can't go to that next level right now. They can't go raise a big pile of money from A16Z and say, hey, we're going to take this yield that is much, much better than anything you can get out of a bank, and we're going to offer it to every consumer around the world.
So, okay.
Right?
Okay.
You can't go to the next stage. And if as soon as you have like a breakout company that can go to the next stage, that will drive like a whole bunch of other seed level companies that have the same pitch but with a twist. And that's like part of like the normal cycle, right?
I think there's another side to regulation too, though, where it's probably going to squeeze centralized exchanges and players more than DeFi. And I think that regulatory arb at some point will become more of a big deal in my mind, you know, as centralized exchanges get more and more restrictive.
So I think I agree with you. But what we've now realized is that if they want to, they can apply the pressure on decentralized protocols as well. I think it would be very easy for them to apply similar pressure onto the decentralized Uniswap, because the front end is very much centralized. And I tell you, I got to ask you this. I mean, I guess when you guys set out to build Solana, you knew about NFTs, but I don't think that you anticipated that Solana would become the NFT chain. And it seems to me, well, you look at the stats and you look at the number of NFT transactions, it seems that it's very, very, very skewed towards NFTs in terms of transactions. I believe that when you guys were building Solana, you were much more focused on order books and DeFi.
The sheer volume of transactions, Serum is what's doing 20 million transactions per day. So
Okay.
the chain is very much functioning at its core like, okay, let's process a central limit order book. It's just the users right now are like very much growing on the NFT side, and user-driven transactions, like market makers need to maintain books. They'll send a ton of traffic to the network. But definitely for users, we see that NFTs are the biggest use case. I mean, our thesis was that like if we build a really, really good network that can handle something like Serum, like a real central limit order book, then all the other use cases are going to be trivial, right? So that I think played out. I think partly why NFTs are growing much faster is because the kind of people that can 0 to 1 an NFT project are not as specialized. They don't need like, you know, economics plus computer science, like 8+ years of both, right, to go start the next version. You can literally just be like a storyteller, right, a content creator, somebody that has like an idea that isn't for entertainment or for like, you know, whatever, a meme, and that skill set is much wider available. So you have like the main constraint there is creativity, right? There's a lot of people trying to be creative on every platform, on Instagram, on TikTok or whatever. This is a new way to be creative, and that's attracting like, you know, a much larger set of people to go try and make it. I don't think we'll ever see that happening in DeFi, simply because DeFi is a very like nuanced, complicated thing, right? That the best you can do to make it commercial is here's like a yield, right? Here's like a savings account with a bigger yield.
Yeah. Okay, so Jose, if you were allocating capital percentage to right now, if you were allocating capital, which sectors are you allocating capital? 50-50, 60-40, more towards NFTs, more towards DeFi? Where would you be allocating capital?
We run a venture fund, so it's pretty similar to Anatoly, where we're looking at founders and teams more than anything. I think there are a lot of opportunities in DeFi where stuff looks pretty good and has been kind of proven to work, has withstood a lot of pressure. And yeah, I mean, I'm not sure about the real yield narrative. I don't think that's really the point at this stage of development of the technology. I don't think yields really matter that much, but yeah, I think DeFi is interesting. I think gaming, I always talk about it when I come on here. I still think it's like one of the most interesting sectors in crypto. And there's a lot of insanely good game developers that are working right now to kind of produce games, but those take time, right? So I think we'll be seeing that in the next kind of 1 to 3 years. And then NFTs, there's a lot of interesting things happening. But most of those deals are kind of like private, like venture deals. I don't know that there's that much stuff sort of trading out there. I'm not a big collector, so yeah.
Okay. Vinny, where would you allocate your capital in terms of narrative?
Look, I think the metaverse narrative is I wouldn't say dying, but it's outside of Korea, it's probably not as strong as it was when Facebook rebranding to Meta really kind of ignited that narrative, and then that's kind of stalled. Facebook stocks down like 50%, 60%. I think we're a long way away from and I've always I kind of jokingly tweeted out like the bottom is when Meta rebrands to Facebook. It was a bit of a premature move, but I don't know. I think that there's just too much wide open space to explore. I don't think it's clear. This should be the risk part of people's portfolios. Metaverse, like you should put something in there maybe, but not a lot, because if it does work out, it'll be in 5-10 years from now, and like a 10K investment or 5K investment or a smaller one. It may pay off, handsomely for you, but I wouldn't be putting in like a big chunk of the portfolio into Metaverse. NFTs, I think there are a couple of blue chips. I would definitely buy some blue chips on, on Solana and on Ethereum, just as some exposure to that space. But again, look, crypto is risky, and then NFTs are like a crypto derivative, and so is Metaverse as well. So you want to be like concentrating in a healthy portfolio, most of your money into again the blue chip cryptos. So the top layer one. So you go Ethereum, you go Solana, you go Bitcoin, whatever, and then like a smaller and smaller percentage into the high risk stuff. And that's how you should layer it on. I don't think it's I get really worried when I see these tweets of someone who's like, I've now got $2 million and all my wealth in NFTs. Wag me.
No. I think that's crazy. You mentioned it, so I think we should talk about it just for a few minutes. And Natalia, I do want to talk to you about the mobile phone as well. But just before that, I think Jose, you mentioned Aptos, and I mean there is a lot of hype around Aptos. I'd love to get your views around Aptos, specifically, Natalia. I'd love to get your views around Aptos and them on the Rust-based Move language. What are your thoughts about this? The hype that's going on around Aptos.
Oh
yeah,
go ahead,
Anatoly.
I think people engineers love new tech. They're a curious bunch, and every 2 years you will see in every technology new stacks coming out. So I'm pretty excited about Move. I think it's a pretty good attempt to build a much more robust proof carrying system that's user friendly. The traditional proof carrying systems like AGDA and a whole bunch of other ones are like inscrutable to even people like me. I have to like really, really like drink a lot of coffee and and start to like really work with those languages. But I think Move is pretty good, and it's possible that Move is the technology that will be the dominant one as a smart contract language. But it's also maybe 2 years from now something else will come out that's better. Like it's with languages, with any kind of like engineering tooling, it's a very, very fluid space. Engineers are really hard to advertise to. You have to build something really, really good and make it easy for them to use, and then it just kind of happens, right? Like Rust wasn't built by Google or Microsoft. It was built by like a small team out of Mozilla. In terms of like layer ones, like there's always going to be new layer ones, right? Like why not? Like as long as you can, get a group of smart people together to launch one, and there's funding available to do that, it's just going to happen continuously.
I mean, I hear you, but a lot of the people that backed Solana financially have backed the team the Aptos team, I think. I mean, Multicoin Capital for one. I think FTX also behind the Aptos team, and that's why I find is there something there? Is there something much bigger there?
The design, Aptos's design is at its core is also a parallel execution engine.
Yeah.
And the thesis for why that's important for me and like why Solana's built this way resonates with those folks. And it should resonate with everyone, because if you have a system that can reliably handle many different smart contracts all at the same time, you don't need a layer 2. You don't need like even any other layer 1, right? That becomes like, if you're thinking about like, if you're making a bet, there's going to be one smart contract chain that processes everything. There's a very likely, it's very likely that the design is going to be much, much closer to Solana than like a L2 modular one. Yeah, and that's why that's why that's like a really smart bet, But FTX holds every coin from what I know.
Yeah, but Multicoin are a little bit more discerning.
I mean, yeah. So let's just talk about that for a second. Like, I think the thesis around Aptos versus Solana is like, look, exactly what Anatoly says. If there's going to be a winner in this space, it's not, there'll be a number 2 as well, and probably a number 3 and a 4 and a 5. And you want to have exposure across the spectrum. So it's hard to predict who's going to win. I mean, obviously we're big fans of Anatoly and Solana in a big way, but it's more of a hedge position. It's a small bet versus Solana is a big position for Multicoin versus Aptos, and it's more of a hedge than anything else. But I think there is faith that this is the right technical strategy, I would say, for smart contracting. Like, I'm a layer 1 maximalist. I think that's why Anatoly and I we got along well when we met like 2018 or 19. It's just because I'm not a big fan of layer 2s. I never have been since the Bitcoin days, and so here we are.
Yeah, I think we had a few developers play around with both Aptos and Sui, which use kind of similar architecture. They're both offshoots of like the Libra team. Agreed, it's like the closest comp is Solana, and Move was really interesting. I think all the devs that used it really liked it, but it's also like a barrier, right? Because you're actually making someone learn a new language. So obviously some devs are excited about learning new tech, and it's clearly like a better language for smart contracts. They learned a lot of lessons from Solidity and stuff like that, but it's still kind of a barrier. And then I think like the most interesting, because I do think there's kind of 2 views of the world. Like, one of them is this monolith view that I think Anatoly and Multicoin are kind of big on, that everything will settle to a single layer 1, right? And like the big advantage, and then there's the alternative view, which is like you're going to have multiple specialized app chains that kind of interoperate in some way, right? Or app specific execution environments anyway. And I think the trade-off is basically, I'm curious if Anatoly agrees, but I think it's basically like composability versus kind of specialization, where if everything sits in one place, there's a lot of benefits in terms of composability, obviously rehypothecating tokens for yield farming and all sorts of stuff that we haven't even discovered. There's also like UX benefits with wallets and stuff like that. And then the other side, like the specific environments, you got a lot of advantages in terms of, first of all, you don't need to compete with anyone else for block space. So like an NFT mint won't bring your game to like a standstill or make it like prohibitively expensive to play. I think that's always going to be an advantage to some extent. And then the second one is just kind of being able to customize parts of your virtual machine, of your consensus, making fees payable in any currency, and not just inheriting kind of all the design choices of the layer 1 that you happen to build on. I think we've seen kind of DYDX be the first big project to really opt for that specialized approach. And I think there's 2 or 3 others that are going to do that. And I think it's going to make sense for a lot more projects moving forward, just because I think so far, at least, we haven't seen, and this is like kind of a controversial opinion, but I don't think we've seen that much composability. Like, there's not that much of a blockchain state that actually touches each other. Like, the main one has been yield farming and like in DeFi in general, like rehypothecating tokens. But even that, like, DYDX is kind of proving that that's not necessarily like mandatory, right? So I feel like for some applications, like especially games, for instance, which have minimal benefit from composability, and there's others as well, I think it's going to make more and more sense for them to kind of deploy their own, like on their own execution environments. But yeah, curious to get you guys' take on that.
Yeah, so there's like the big engineering challenge there, right? Like, and that's been proven that that's a challenge on Solana. When you have an NFT mint, can you concurrently handle, like at the same time, a low latency like Serum market. And obviously we think that we can. There's a bunch of technology that's being rolled out today to do that. And if that's provably like demonstrated, then you don't need modularity. You can just scale the layer one and include every possible like use case in there. We think we can do it. Jump thinks they can do it, right? They're launching a second implementation, like a totally rewritten from scratch implementation of Solana client that's like optimized to the hilt on their like a high performance computing team that they use for high frequency trading. Is that like, if you have that, do you need layer twos? And like, why would you, like, what's the benefit of launching a layer two in that environment? I think that's the big question. And we'll see. I don't know, right? Like, I'm an engineer and I have like a particular view that's very much like based on my experiences and biases, but there's plenty of other engineers that I respect that disagree with me, right? So we'll see. And that's part of the fun.
I think what you're saying is that the three of you are layer one maximalists. Vinny said he's a layer one maximalist. I think the two of you have said it in not as many words, but you kind of said, look, we want to keep things on layer one. Anatoly,
we haven't. So the reason for that is like, we haven't seen composability across chains to be like a really big thing outside of like chasing yield through a bridge. But nobody's moving NFTs to another environment, right? And that's like that means that the place where you get users, that execution environment is sticky for the users because the UX of switching to another environment and the costs and the risks are still prohibitive. I don't know if that's ever solvable, right? So that's kind of like the big question there. Like, you could build all these very specialized applications, but will you actually ever see anything move between any of these chains to a significant amount?
I think arguably you haven't seen that even at the layer one level, right? Like, the main use case has been, I guess, chasing yield and I guess NFTs as well, even at the layer one level. But I agree, like, even native tokens, you don't really see any native token, I think, that trades higher, like the highest volume is always on its own chain, right? Like, even though Solana is way cheaper to trade, like ETH and all the other L1 tokens still trade more volume on their own chains, which is interesting. But I guess it's like, I do think there are kinds of applications where you don't mind going to a new chain and you almost won't. Obviously, once interoperability tech gets there, and something like IBC, I think is probably the thing where we think does a best job at that in a trust minimized way. Like for a game, for instance, it makes sense. Like you're interacting with the chain, but you don't really need to know that you're doing it. And I think like one of the advantages of specialization is definitely what you said of block space. And I think if Solana solves that, which I think you have to have a bet there, then it becomes a lot less compelling. But the other one is there's always going to be benefits to like customizability, right? Like being able to have your oracles, your validators post oracle updates or secure a bridge, or having fees payable in any currency, being able to implement stuff like threshold encryption without waiting for the L1 to do it. I think there's always, and also just like more control of your state, right? Being able to roll back if there's a hack and not have like all state have to be rolled back. Like, I think there's still like advantages to specialization that aren't just sort of not competing for block space. So I'm interested to see. I think you have to have bets in both, in my mind, like in the monoliths and in kind of the more modular vision.
I agree. We are running out of time, but Anatoly, this is something that I do want to talk to you about. I think it needs to be brought out. I mean, when you guys came out and said you were launching the phone, initially my reaction was like, what the hell are you guys doing? And why are you guys trying to take on Apple and Google with the phone? And then, I was quite vocal about it on Twitter. I'm not going to show you the tweet because I want you to stay on the stream. But then Raj came after me and Carl came after me and a whole lot of other people came after me.
I came after him as well.
When he came after me as well. And then I thought, let me do some research. And I listened to your presentation. And then I think the penny dropped for me. But I wanted to just get you on here and share the vision. I know your background is in phones. I know that's where the passion came from. Run me through the thinking.
Yeah, well, like myself, spent like more than a decade at Qualcomm. When I joined crypto, it was extremely frustrating to me to see how wallets were built and the security around them, especially on mobile, because you have all the hardware in every device already in the world that's already baked in to store your seeds securely and to do signing securely in such a way that like stuff like the Slope wallet hack cannot happen. And that like is like, to me as an engineer, it's just like burning in my brain. Like, why isn't this true yet? And that's really where that initial idea came from, is like from the security angle. But what made it more like why it became like more than an idea is because when we saw the NFT space blow up and we were talking to developers in that ecosystem, their biggest frustration is again with the app store policies with Google and Apple. Like, why do they need a 30% charge on a user generated content that like Magic Eden doesn't control? The user sets a $10,000 price for that NFT. There's no way they can charge $13,000 on a mobile device, right? Like, and they can't eat the cost, right, for that sale. So it's just that Web3 business models do not work inside the Apple and Google stores. And from that point of view, you kind of have like the two necessary pieces. You have a technology improvement, and then you have a platform that has demand for this thing. So that's really what drove it. What I really want to build is we don't need to take on Google and Apple. Like, we're not planning to sell. I'd love to sell 1 million devices, but that's not like the success metric for me. Like 50,000 Web3 users that are dedicated, that have this device and are using it, is a better distribution channel for devs than the big app stores are right now.
I mean, when you say 50,000 distribution channel for devs, so devs use this phone, devs become familiar with how to code around a phone with built-in technology. What happens then? Like, because you got 50,000.
So we have, if we get to 50,000 sales, which it looks like we're on track, we will get to a place where devs can build applications for the Decentralized App Store. That's part of SAGA. This is a separate app store from the Google one. This is a standard Android device. It supports all the Google apps out there, but it also has a dApp store that's SAGA branded. Devs can distribute apps to that dApp store directly to those Web3 users without the kinds of restrictions that they see on like, you know, Google or Apple. And that's a better distribution channel for them. That means they can build different kinds of applications.
But why would the devs build applications for a market where there's no users? Where if 50,000 people have got the phone, your maximum market is 50,000 users.
How many people generate all the volume on OpenSea and Magic Eden?
Today, probably 50,000. You might be
Yeah,
right
there you go. Like the Web3 users are the most lucrative, like the most important users on the internet right now in the world. They generate ridiculous amounts of volumes, ridiculous amounts of revenue.
So do you see this becoming the future Apple App Store? Like, do you think that this decentralized app store this decentralized app platform that you guys are building, app store, app platform, app download protocol, is that the future? Is that the Web3 app store?
If crypto takes root, right, and crypto like adoption really takes over, and this idea of like self-custody interaction with the Web3 really takes over, the app stores and Google and Apple have to change for that to happen. The devices have to support native signing. Like all the like little 4 pieces of technology that are like 5-person team built for this have to be replicated inside Google or Apple, or Google and Apple die, right? Those are the 2 options, or crypto never takes over. So like, it's a pretty good, right? Like we have 3 possible future outcomes. Like for SAGA can be very successful for the industry as a whole by just changing the minds of the folks at those big companies. And
how much? Go on.
And like that, for me, like I would love to see it much more successful than that. I want to see that people are buying this device because there's a Web3 application that is so compelling that they're going to go buy this device to use it. This is when I'll do a victory lap. That means that Web3 has legs, that there's somebody that figured out like a real use case with real product market fit that is crypto native, that really needs crypto, right? Like to work seamlessly and with beautiful user experience. And that's what's driving adoption. To me, that would be like, okay, the space is going to make it, right? Like the entire industry is going to make it. So that's really my goal here.
I think Tolly is sandbagging a bit here, because like there's a couple of vectors which makes this thing take off. first of all, it's native Android, right? So like if you're already using an Android phone and you're part of the next cycle to upgrade, why wouldn't you just go with the Saga? It's a high-end one. So like if I was using, I use an Apple, but if I was using an Android phone and I'm going to go for the next cycle upgrade, I'm going to get the Saga. Like it's a no-brainer for me. Like why not get a high-end phone with the latest Snapdragon chip, whatever. And I think the other thing that people miss on this is that, just knowing Toli, this is going to be probably the most secure Android phone out there. Okay, like when they launch it, people get worried about Google spying on you and all the other stuff and the paranoia around Android. Like I have a little bit of paranoia around Android. I have less paranoia around Solana, like the Saga, versus a Galaxy phone where Samsung's putting a whole bunch of bloatware and other shit on their phone as well. So that's why I look at it. And tell you, like we haven't spoken about this, but my pitch, if I was like in your seat, would be like make this the most secure private phone out there, and just basically make it the standard for a secure private phone. That's
so like the company that's building it, Awesome Privacy. When they were in that early stage, their whole design and software stack was built around privacy, and like there's literally a button that kills all the services on the device and switches you into like a private mode. Right, like so.
And Ron, you asked me would I switch, and I, like initially it was like, look, I'm just gonna run both. But the answer is I probably will switch when I get comfortable enough. Because like the biggest issue with moving from Apple to Android is you have to go repurchase all your apps that you bought in the App Store. You have to go it's a lot of overhead just configuring and migrating across from one to the other. But I'd probably do it. Maybe I won't do it on version 1 entirely, but I'm definitely gonna have the Saga as a second phone, and maybe version 2 Saga I would move across. But for me, this represents like the next step forward in key management for people on device, better user experience, and better privacy on the phone.
Listen, I'm one of the 3,123 people that's ordered a phone. So, awesome. I think, I am one of them. I'm still very nervous about making the jump from an Apple because my laptop's an Apple, my iPad's an Apple, my phone's an Apple, and everything just works beautifully in the ecosystem, and I don't have to update my photos, and everything just works. That's for me is the biggest barrier to entry, but I want to test it. I want to try it, and maybe I'll be convinced, and that's why I ordered the phone. Listen, guys, we're completely out of time. We're over time. We're out of time. We're everything. I guess we'll see you all again at Solana Breakpoint. We covered Breakpoint 1. We're going to be back there covering Breakpoint 2 again. It was amazing. We had a banter party. It was amazing. So go and check out Solana Breakpoint. Come join us there. I think it's November, right? It's beginning of November.
4th to 7th.
Amazing. Guys, thank you so much. Anatoly, thank you. Jose, thank you. Thank you. To the best community in the world. Thank you, guys. And just hold on for me 1 second because there are a couple of announcements. First of all, again, just want to thank our sponsors, NordVPN. Again, if you are looking for a crypto VPN, rather go to the company that is a crypto VPN company or a company that really likes crypto and supports crypto. Protect your crypto until you can get a Solana phone and use a NordVPN. $3 a month. That's pretty much the way to do it. Hi, Alpha Show. Let's quickly check on my BYBIT portfolio on Monday. Oof, I'm not doing well. I've got to get off the show and I'm going to relook at my portfolio because I think Carl Dupes is catching up to me. I'm here, 340.
Are you in any trades?
I am. I'm long. I'm long for the bounce. I'm long for the bounce because I think there will be a. Well, let's. I'm transparent about my trades. I'm long near. I'm 20% down. I'm long Rune. I'm 14.93% down. That's what I'm long.
Are you adding more? Or is that like
I'm not because I added more, and this is a double position, so I've already added and already increased the margin. I'm waiting for the bounce, but on the weekend I'll probably do a stream and I'll just show the guys what I've been doing. So yeah.
If you see my show, I say where it's going to bounce from.
Where's it going to bounce from?
You have to watch.
I have to watch your show. Okay, if you want to know where it's going to bounce from, watch Carl Dupes' show. Listen, it did go a little bit longer. It was unadulterated alpha. Yes, it wasn't around trading, but this is the kind of stuff that you need to know. And I don't know any show that could bring you Vinny Lingham, Anatoly Kovenko, and Jose Macedo on one show except Banter. So listen, love you guys madly. Have a great weekend. Spend some time with your family. And if you're trading, trade well and make sure that you beat Carl Dupes in the trading competition.